And good morning. My name's Sterling Smith, and I'd like to welcome you to the February As an Edge marketing meeting. We do have some news out today, as today we got the release of the 24-25 Outlook conference numbers, and this is our first look at what we can expect for 24-25. And we're going to go through and look at what the balance sheets have to say and what they imply for us. So the first one we're going to talk about here is the corn market. And as you can see, we're looking at planted acres being about 3.6 million acres less than last year, with harvested acres down about 3.4 million. Now, this is predicated on a yield of 181 bushels per acre. One thing I'd like to point out, these sheets are a projection. They are rather imaginary. They're based largely on trend line numbers. I can assure you this will change. And one of those things being the yield. As you can see, last year we yielded 177.3 bushels per acre. Seeing these big yields, something the USDA puts out every year, and every year we seem to fall short. Most important number is down here at the bottom, and that's ending stocks for corn. Last year, we were at 2.172 billion bushels, up noticeably about 800 million from the previous year, and that is what has cast the long shadow on prices. Ending stocks right now are projected to be 2.532 based on the current guess about where they think the balance sheet is going to land. Couple of things that I think we should keep in mind here before we get too bared up is most likely that yield is not going to be 181. Maybe 178 might really be the best we can do. We have not gotten to these levels. There's been weather issues. There's been snafus. And yields seem to have peaked out a little bit. I'm not saying it can't happen, but I'm just saying a realistic conclusion is that we probably see something maybe closer to 178, in which case that would take 250 million bushels off of this ending stocks number and get us a number back fairly close to where we were last year. The ideas for this report, we had some people guessing 1.8 billion, which was completely out of bounds. We had other people guessing 2.85 billion bushels for ending stocks for new crop. That, again, I think is out of bounds. Right now, this is where the USDA is at. I don't think we're probably going to get to that number. And if we could see exports improve a little bit, particularly for old crop, we can tighten this balance sheet up a little bit. So for where prices are right now, this report is a little bit bearish, but realistically, I think we may be a little bit closer to neutral than what the market is telling us right now. Moving on to the soybean market. We are seeing harvested acres up about 4.2 and planted acres up about 3.5. So the total pool of acres, if we look at corn and soybeans as a total pool, is being left unchanged from last year. Current price levels may or may not be as supportive to that. With the soybean balance sheet, we're looking at an estimated yield right now at 52 bushels an acre. That can happen. If we get good weather, we get planting in early, we don't have a lot of problems, and see some reasonable amounts of precipitation, we can do this. This puts ending stocks for soybeans at 435 million bushels, up from 315. And that number is bearish. They also did push up crushings. I think we could maybe add 50 to that. Exports at 1.875 is an improvement. I do think that number is probably right on. There is some potential for us to improve that, and some of that may come via meal. So again, that 435 is an awfully big number, and it's going to take a lot of things to go right to get to that projected farm price at $11.20 a bushel. If we can come up a little bit short on those ending stocks numbers, meaning if we can finish at about, let's say 385, maybe we could put another 40 or 50 cents in that. But if we go back to corn here, look, the corn ending average farm price at about 440. That number is probably going to be fairly close to where we are right now. We have some risk premium in the market. We're going to have to see how planting goes. And are we actually going to get these acres, and are we going to get them harvested? That's the other question. Is we could end up maybe seeing some acres exit that the USDA thinks we're going to plant that we don't, simply because prices are obviously in a very shaky situation right now. Again, this report is not bullish. It is not favorable, but it could have been worse. Moving on to the wheat market. Wheat, not a lot of changes here. Ending stocks for wheat, they had at 769, up from 658. Planted acres came down noticeably, 2.6, but harvested acres went up. Harvested acres with wheat can have a lot of variation. It depends on how weather and things work out in Kansas. Right now, things seem to have improved, and we've seen some precipitation improve in the southern plains, and that should work to maybe increase the harvested acres. One thing they did do is they did push up exports a little bit, and there is the potential for those exports to improve a little bit, particularly for old crop, which would tighten up the carry-ins for wheat, and that in turn would be able to do something that could improve the situation for wheat a little bit. Average farm price, $6 a bushel, which is right about where the futures are trading right now, and again, $1.20 lower. So again, we're going to have to pay attention to what's going on, because we are going to get some opportunities to do some things, but they are going to be quick and fleeting. This right now is a chart here of December corn futures. And as you can see, we were trying to form a little bit of support here, and we kind of fell off the cliff. We're only down 1.25 today. One thing I'd like to point out is the fund position for corn is at a near record short. This is potential fuel for a rally if we start to get some weather problems. I'm going to pull up a generic December corn chart, and we're going to talk about that a little bit right here, right now. And we're going to look at this on a seasonal basis. We're going to take this back 10 years, kind of give you some ideas about what to look forward to going forward here. And when we take a high-low average of this, very often we see prices improve starting usually right towards the middle of May. And then we see a typical bounce. You can see up here where we've made big highs, and we see higher lows. But we can look for volatility to move into the market from the middle of May, probably right through about the 4th of July period. This is when funds typically get nervous about crop conditions, and this can do something that can kind of help propel us and maybe give us an opportunity to get some sales in place. So we've brought back the action indicators, and that's something we'll be watching. And along with that, make sure to pay attention to the Tech Tuesday newsletter, simply because that is probably going to give you the clearest perspective about when the market has rallied. I don't think we're going to see spectacular prices, but if we can sell something, 30, 40 cents better than the average typical price, we may get some opportunities to do that. So again, we need to pay attention to what is going on. For soybeans, situation is a little bit different for soybeans. Soybeans typically tend to be a little bit more volatile. And as you can see, again, best prices, the upticks in this average happen again from about Memorial Day, moving into July, and then occasionally we get some risk premium coming into the fall season. So again, I would expect corn and soybeans to move in unison coming through with the new crop. And if we can get a pop in one, we will likely get a pop in another. The soybean fund position is also extremely large, to the point of being nearly out of bounds. I don't know how much gusto they have left to really come in here and sell that much more. So that selling pressure in the market should be working to abate a little bit. And let me pull up a chart here of the November soybeans. Actually, let's look at new crop beans here. We'll look at those first. So looking at new crop beans, you can see we have been in a very bearish situation. We are on all the indicators becoming deeply oversold. Unless we can have some planting issues, most likely we are going to continue to drag lower and we're going to see pricing pressures come in. The good news is, at least certainly here for old crop at 1172.5, we are getting down to prices where that should spark a little bit of importer interest, and we may be able to see export sales pick up a little bit, and that's something that could work to make things a little bit better. But looking at new crop right now, we're at 1152, so we're actually trading at a discount. So the idea that we're going to see more acres is creating some pressure in the market right now. Again, these indicators are all very deeply oversold. It will be a while before the funds start rolling their positions, their short positions, from old crop into new crop, and they probably won't be as willing to do that simply because there will be more risk. So again, most likely we're going to have a risk period coming in starting in late May and working into July and maybe again around pod set, depending on how the weather plays out. So that is something that will give us some opportunities to sell. And again, with this market, anything that we can get really north of about 12 and a quarter is going to be really good. And I would be really paying a lot of attention when we get to around $12 a bushel. So with that being said, it's again, our opportunities are going to be fast and fleeting this year, and we are going to need to remain fairly focused on everything that is going on, simply because the picture will change and there is some potential for improvement, but those improvements will probably work to be short-lived unless we see something to interfere with planting and we don't see these acres expand. One other thing that we need to think about also is towards the end of the year, there's a good chance that we are going to see the weather pattern change into something that is going to be less favorable for South America. And if that does in fact happen, that's something towards the end of the crop year, getting around harvest, where we may be able to produce a rally if we have some trouble with the Brazilian crop. And maybe we see additional trouble in Argentina, because right now, Argentinian production, Brazilian production, everything is going to be extremely stout, and that is going to work as a natural hammer on prices. Fundamentally, I don't see anything here changing to drive further ethanol use. Extra crush and biodiesel use is something that's good and should be a little bit supportive, along with additional soybean meal exports generally happening globally. So again, the large Brazilian production is weighing on things, but how much more downward pressure we're really going to see may be limited and constrained simply because of the large fund short position. And when the market begins to flatten out, that does set the stage to see some fund covering. So as far as other items going on, interest rates have come back down after the little spike that we saw from the inflation numbers. We'll get another set of inflation numbers tomorrow. Crude oil prices seem to be fairly well contained between $71 and $77 a barrel. So we don't have a lot of big outside influences at the moment. So looking to see fairly stagnant market action for the balance of February is probably most likely. And when we move on to March here, we'll have some better planning ideas and see what's actually happening, and we can start adjusting these numbers. But we don't expect a big adjustment on the WASD until July. So Brooks is out on meetings today. I am still recovering from COVID and my voice is struggling a little bit. So we have no other big items today. Again, make sure that you are reading the daily market emails and listening to the podcasts, as it's going to be more important this year than any other year of recent memory, simply because we aren't going to have the same price elasticity. We're not working from a good price level. So ideas about what a good price this year are going to be different from what we've seen over the last 3 to 5 years. And if you have any questions, always feel free to reach out. And everyone, thank you for your time and have a great day.